really fundamental message that consumers should be taking today is that it's financially insane to buy anything other than a Tesla. It'll be like owning a horse in 3 years. I mean, fine if you own a horse, but you should go into it with that expectation. If you buy a car that does not have the hardware necessary for full self-driving, it is like buying a horse. And the only car that has the hardware necessary for full self-driving is a Tesla.
Hey guys, it's Mrs. Invest. Okay, so let's talk now about my outlook to 2030 in terms of Tesla's market cap and Tesla's potential stock price. And again, this is like my laughably simple model, but again, if you want super complicated models, they're out there, but I like to keep it simple. So one way you can look at it is Elon in an interview said that by 2030, he expects Tesla to have a 10 million car Tesla-owned Robotaxi fleet. And he also says that he thinks each Robotaxi could earn $30,000 a year in net profit. So if you multiply 10 million vehicles by $30,000 a year, that gives you a $300 billion in profit. So $300 billion in profit multiplied by 25 for a PE ratio, which I think is abhorrently low, but let's use that to be ultra conservative. That gives you a $7.5 trillion market cap, and that gives you a corresponding share price in 2030 of $7,500 a share. And I know that that sounds crazy. I feel like crazy for saying that, but a lot of people also said that, you know, Apple and Amazon would never reach a $1 trillion market cap when they were $100 billion. And, you know, now Apple is at over a $2 trillion market cap. So, on one hand, yes, I feel crazy for saying that. On the other hand, it's hard to argue against numbers. And again, this model is super simple because I'm literally taking two things Elon said, multiplying them together and giving them a PE ratio of 25 to come up with $7.5 trillion. The thing that's interesting about it is, despite it being so simple, it is a logical progression if you compare it to Kathy Wood from ARK's Invest Tesla price target at 2025, which is a bull case scenario of $3,000 a share. So $3,000 a share in 2025, $7,500 a share in 2030 is like not out of reach, right? Like that seems like a logical progression. The other thing about this scenario is, if you noticed, that was only Robotaxi network revenue. I didn't talk about car sales. I didn't talk about Tesla Energy, Powerwall, Megapack, solar. I didn't talk about revenue from Tesla Insurance or Tesla Service or anything else that they license. Maybe they're charging network to other companies. Like that was just Elon's picture of the Tesla-owned Robotaxi fleet, and that gets you to $7.5 trillion. Like that is insane. So it could very well be 10 trillion. It could be above that. And then some people say, well, you know, the S&P 500 only has so much trillion in cap. You're saying Tesla's going to be a great part of that, but Tesla's not just an American company. Tesla is now global. So you can't compare them to the market cap of the US market when it's a global company. At least that's the way I look at it anyway. But let's say you say, nope, the Robotaxi fleet, autonomous vehicles, full self-driving is a farce. It's not going to happen. I disagree with you, but we'll go with that. And Tesla's only going to be able to continue scaling, making vehicles and making some energy, and that's pretty much it. So let's go with that theory. Elon said by 2030, their goal is at Tesla is to make 3 terawatt hours of batteries by 2030, and they're going to be supplemented by their battery suppliers. And the way he worded it was he thinks he's going to get at least as much, if not more, batteries from their suppliers. But let's be super conservative and say they get less. So let's say Tesla makes 3 terawatt hours, they get 2 terawatt hours from their suppliers. That's 5 terawatt hours of batteries by 2030. Like, what do you think they're going to do with those batteries? You think they're just going to sit there? And so let's take those 5 terawatt hours of batteries and multiply it by about $500 in revenue per kilowatt hour, whether that's a car, whether that's energy storage, whatever. To come up with $500 of revenue per kilowatt hour, I looked at what is the revenue that they're currently making per battery pack of each unit. So the battery packs are different sizes depending on what model you're looking at. So for the Model 3, the worst case scenario in terms of revenue, which is the base model, so not the extended range, not the performance, just the cheapest Model 3 you can buy in the US is $30,690. Based on the fact that it has a 75 kilowatt hour pack, the worst case scenario for revenue per kilowatt hour today for the Model 3 is $409. And then if that person were to add the $10,000 full self-driving package, the revenue per kilowatt hour would go up to $542. Now, of course, you have to consider in these two pink columns the fact that it's a weighted average, so there's way more Model 3s sold than there are Model S's. Cybertruck hasn't even come out yet. I didn't even include the Roadster in here because it's such a low volume car, it doesn't really matter. But I think somewhere in these pink columns today, some kind of a weighted average, giving more weight to the Model 3 and Y versus S, is an estimate for revenue per kilowatt hour. I think based on today, probably this first pink column is more accurate because the full self-driving take rate is lower today than I think what it will be by 2030. As we go farther out, I think this pink column is more accurate. And of course, once they come out with a $25,000 car, this number could change too. But I think the big thing is if we're going to make any assumptions, one assumption that I think is fairly accurate is to say as we go farther out to 2030, the take rate on full self-driving is going to go up, and possibly the cost of full self-driving is going to go up as we approach level 5 autonomy. So it's hard to give an exact number here, but based on these two pink columns, I think $500 is a fairly accurate but conservative number to use in these calculations, especially considering that I'm picking the base models here and not everybody buys the base model. Most people buy a car with some additions on it. So that's what we're going with if you're wondering where I came up with $500 per kilowatt hour. So 5 terawatt hours of batteries multiplied by $500 in revenue per kilowatt hour gives you $2.5 trillion in revenue. I know that sounds crazy, but $2.5 trillion in revenue. And let's use a price to sales ratio of 4, which again, I think is very conservative for a company that's growing as fast as Tesla is. And you get a $10 trillion market cap and a $10,000 share price of Tesla stock in 2030. And I know that sounds crazy, but I'm just working with the numbers here, and this is where the numbers are leading me. And again, this 10 trillion model is no robotaxis. This is Tesla cars, assuming they're able to scale, and Tesla energy and whatever else they use to make profit other than a full self-driving. But it's becoming less and less likely that full self-driving isn't going to happen. So when you think about that, you can get to 10 trillion in market cap without full self-driving. Like this just it starts to get crazy. And I don't these numbers sound crazy. They are crazy, but if you see how I calculated them and the numbers I'm using to arrive there with relatively conservative estimates, it becomes not crazy, but then it becomes hard to imagine because you're well, the greatest company right now is Apple and it has a $2 trillion market cap. How could we get to 10 trillion? And so anyhow, these two very simple models are, the first one was 7.5 trillion market cap, the second one is 10 trillion market cap. Let's say I'm completely wrong, and let's take $5 trillion market cap by 2030, which is a $5,000 share price. The next question becomes, how much is Tesla worth today if you think it's going to be $5,000 a share by 2030? And this is kind of where you do a little bit of math and things get fun. So one way you can look at it is by using something called discount factor. And discount factor basically is a very simple mathematical equation that says, if I think a stock is going to be this price at this date, and from today I'm looking for a certain percent return, this is what I should be open to pay for the stock today if I think it's going to be X price by this date. So let's use the $5 trillion market cap. So that means $5,000. If we believe Tesla is going to be $5,000 a share by 2030, what would we be willing to pay today for the stock? So the first thing you have to do is say, well, what kind of return do you want to get annually for this investment? If it was going to be 2%, you wouldn't invest in Tesla stock. You wouldn't take the risk because you could just put your money in a savings account. So let's say you want a 15% return each year from now until 2030 on Tesla stock. What would you be willing to pay today to get that kind of return? So this is the beauty of discount factor. And let me know if you guys want a video just on discount factor. I'll go more in depth, but basically the formula is this. You do 1.15, so That's a 15% return, assuming you want a 15% return, to the 9th exponent, because 2030 is 9 years away. We're in 2021. And that gives you a discount factor of 3.51. So what you do is you divide, you take 500 and you divide, or 5,000, and you divide it by 3.51, and that gives you $1,400 approximately per share that you should be willing to pay today for Tesla stock if you want a 15% return year over year until 2030, assuming you believe Tesla stock will be $5,000 by 2030. Tesla's trading at $661 at the close on Friday. That's a huge difference. So let's say, okay, well, I want a 20% annual return. Let me just do the numbers here, actually. What is the discount factor for that? Okay, so 1.2, let's say you want a 20% return to the 9th exponent for 9 years, gives you a discount factor of 5.16. So you take $5,000 a share in 2030, you divide it by 5.16, and that gives you a price that you should be willing to pay today for Tesla stock of $968 a share. My God, I'm getting hoarse. I've been talking for so long. You should be willing to pay $968 a share for Tesla stock today if you believe it will be $5,000 a share by 2030, and you want 20% return per year, which is really good. And this number is actually very interesting because there's a lot of really good quality analysts on Twitter. The one I'm thinking of specifically is Gary Black. And his price target for Tesla in 2021 is exactly $960 a share. So it's very interesting how his number and my number, based on like literally the world's simplest model of Elon saying two things and me multiplying them together and then just undercutting myself, going from 7.5 trillion to 5, that we all end up at the same price target. And if you're following me until this point, I mean, this is like the beauty of investing, right? Like you see a company, you come up with a thesis, you can make a complex model, you can make a simple model, you can have no model at all, and you come up with a price target. And then with discount factor, you can see what you'd be willing to pay today for that investment. And you know, based on the numbers, it becomes hard to justify not investing in Tesla stock at these prices. For myself, I don't know what's right for you. I don't know what your risk tolerance is. I don't know, what your goals are with investing, but at least for myself, it becomes hard to, turn a blind eye to these numbers and say, well, that's just too high of a market cap. It's just not possible. Like, if you don't think it's possible, then you have to come up with numbers to justify why you don't think it's possible, right? You can't just blow it off, because people blew off Apple, people blew off Amazon and said, there's no way there'll be $1 trillion market cap. There's no company today is, a trillion. No company will ever be worth $1 trillion 10 years ago. And yet here we are, Apple is worth $2 trillion. So is it really that unreasonable that the next number one company could be $5 trillion? I don't think so. And I'm not saying it's going to happen tomorrow. I'm talking about the next decade. And I don't really pay attention too much quarter to quarter other than to keep up with things. I'm looking for the long term, and I think their long-term future is so bright. I think this is the greatest growth stock that I'm going to see over the next decade, and I'm so excited to see where it heads. But you might be having a question like, watching this video, like, should I invest in Tesla stock, based on all of this? And I don't think you should invest in Tesla stock based on what I'm saying. I'm just here to kind of play with some numbers and entertain you guys. But if you're considering it, I would just give you one word of caution, especially if you're a beginner, is that Tesla is by far the most difficult stock I have ever owned in terms of like emotionally and psychologically. It's extremely volatile. The price is always fluctuating, less so since it's joined the S&P, but it's still a very volatile stock. It's had one 50% drawdown in March 2020. It's had another big drawdown recently, like just right now basically. And although it's becoming harder and harder to be a Tesla naysayer because it's so obvious where the company is going, back in 2019, there were very few people who were Tesla proponents, and there were a lot of people who were Tesla naysayers. And like, just psychologically, it's just so hard to hold on to a stock when it's gone down 50%. And then while you're already have lost 50% of your investment, to continue buying more. and also to not listen to all the people who are telling you that the company is overvalued. Like, it's psychologically, it just like drains on you as the years go on. I've been like, I think a lot of Tesla investors have been like silently suffering because we've been dealing with this roller coaster of a stock. We've been dealing with all these people telling us that the company is like overvalued, it's worth nothing, it's going, you know, it's going to $100 a share. And I feel like finally those people are starting to quiet down, but I don't think the volatility is going to end. I think this is still going to be a volatile stock. And so that would just be my one caution, is just know what you're getting into with Tesla stock, because it is not an easy stock to hold, at least in my experience. But anyways, I hope you guys enjoyed this video. Like it if you learned something, subscribe to my channel if you're new, and I will see you guys in the next one. Bye.